Hey, welcome everybody. We really appreciate you taking the time out of the schedule. Hopefully you can get restful feet during our discussion today. This is the protecting the business of your business. And we've got some awesome panelists that I'd like to go right. I'm Jared Burt, and I'm a former dealer. I was an owner-operator of Rexburg Motorsports in Rexburg, Idaho, just on the west side of the Grand Teton Mountain Range. And I also worked for an OEM after I sold the dealership. Went to the other side and learned that, and I currently am owner and an operator of a couple other businesses, one being Hero Hub, and I work with some great manufacturers and dealers in the industry, so it's just been a delight to stay in the industry and work among colleagues and friends that I knew also as a dealer. Let's go ahead and get started with our panelists. We've got Doug and Sanjay. We've got Barry and Rick, and I'll let them introduce themselves and just share with us what your role is, your company, and you're the subject matter experts here. So just a quick insight into what your expertise is in for our audience. Thank you.
Hello, everybody. My name is Doug Choi. I've been in insurance since 2005. Started as an insurance underwriter for the first 15 years. Came over to the broker side in 2020. And on the weekends, I'm also an automotive and outdoor recreation enthusiast.
Sanjay Mehta with the Liberty Company. I'm the Chief Market Officer. So I help manage the relationship between our firm and the insurance carriers that we trade with. Been in the industry 20 plus years and thoroughly enjoying it.
Good afternoon. My name is Barry Glenn, and I'm clearly the oldest guy on the stage because I've been in employee benefits for 35 years now. I'm the president and CEO of Triata Health and AIM Trust, and we're here to help you guys understand the complex world of health insurance.
I like how Barry pointed out he's the oldest individual on stage, yet I'm probably the youngest and I got no hair. Thank you, Barry. Rick Callis, I'm the Partner Development Manager at Car Connect. We are a Fiserv company, and we assist MIC members with their payment acceptance.
Thank you. So before we get started, I want to make a confession. One of the only things that I like on social media that my daughter introduced me to is on Twitter. There's an account called 1000 Ways to Die. And this is disturbing, I know, to many of you that have just grimaced when I said that. But I watch these videos, and they're just basically fail videos. It started with an obsession with snowmobiling fail videos, and I've just continued. As a dealership, there were so many things that kept me up at night. Worries that I had about my employees, about my finances, about just a multitude of risks that I had associated with just being a small business owner. And in preparation for this, to get me back in the spirit of day-to-day being a dealership operator, I went to ChatGPT, and I gave the prompt, I put in the prompt, I inserted the prompt, what are 100 ways that an owner-operator of a power sports dealership would go to jail for because of a behavior or action of their employees? And in like 3 seconds, this AI search gave me a list of 100 ways that I would go to jail just because of stupid stuff that my employees could do. And as I'm reading through this, I'm getting PTSD. I'm like, these are real things that happen, real issues that we face as a business owner, as a dealership with employees. How many of you have a story that you could share right now about something crazy that an employee did that, cost you dearly, put you at risk to something? Raise your hand if there's a crazy story. Okay. Yeah, most of you. And so what keeps you up at night? And since you're here, what can you do to sleep more restfully? What could you do in your dealership? And what we want to do is take away 3 or 4 things today from our panelists, from the subject matter experts, that'll help us rest easier and have more confidence that those risks are mitigated, that you're not going to jail. We don't want to read about anyone here in the news that you're going to be in jail. So let's start out. I think that's a great segue into the insurance space. I had a salesman that took a Yamaha Rhino out back, and this was before they had doors, and he did cookies. And my customer, I won't go into details because it's gory, but he put his leg out when it flipped over doing cookies, and it was bad. So this is really, really an important topic for dealerships. I'd like to understand, what are some of the coverages that a dealership maybe overlooks, leaving unexposed, exposing them to more risk?
Yeah, it's a great question. So as a dealership, you think, oh, my business is, I take a product manufactured by someone else, Kawasaki, Yamaha, whoever, and I sell that product to the end user, right? And so if there's any product liability off of that, well, I was just the dealer. That should really go on to the manufacturer. But what dealer is really selling just that? You sell accessories, you modify the product, you sell products with your label on it. And so in a way, you become the manufacturer as well. And so if something goes wrong, you can get dragged into that lawsuit, or at least named in that,
Yeah, so that's something that Garage Keeper's liability isn't going to cover.
Correct. Yep.
This is okay. So let's ask the audience. I'd like to hear from you. Everyone has experience using Menti if you've come to some of these seminars. So open up your cell phone, close out TikTok, and let's look at, have you started a new operation that your current insurance is not aware of? So let's just take a quick inventory about anything new. Now, maybe you started to rent ATVs or motorcycles. Maybe you got an extra policy for that. But is there anything? Go ahead and open up Menti and then type in the code 47832640. And then answer that question. Any new ventures, any other businesses? What's another one that dealerships, I've been in dealerships that have basically restaurants.
Absolutely, right?
What is that? What does that mean? Anything?
You have a service bay, and many customers wait while their vehicle is being serviced or their unit's being serviced. And so there may be a coffee shop or a sandwich shop, and you think you're a dealership, but all of a sudden you have a restaurant exposure, right? And you drop a screw in the potato salad and someone shatters a tooth. Are you covered? It's just something that you would never think of, right?
Well, the screw, or I mean, just getting food poisoning if I use old cheese in the cheeseburgers.
Absolutely.
Okay.
And what you mentioned about, hey, I sell snowmobiles, but maybe I'll rent a few. And you think, oh, that's similar operations. No, it's completely different,
Yeah. So I like the point that you made at first, that there could be a product liability just by white labeling products. We had these ATV flags for riding out at the dunes, and we put our logo on it. Certainly, I don't need product liability insurance for that, though, right?
Technically, you do, right? It's your logo on a product, and even if you didn't manufacture it, if something goes wrong, if that product fails to perform in some way, and someone is injured or killed and lawyers up, who are they going to go after? They're going to go after the logo on the product. That could be you.
And many times it's not, the claim might not fall on you. but you might be responsible for defense. So as we know, defense costs sometimes exceed the amount of the demand of the claim. So having that coverage there kind of helps you, get yourself out of the claim, but you'll incur defense costs.
Yeah, it seems like as a dealer, you're an easy target for a lawsuit.
Yeah, as a dealer, you're in a very unique position because you're between the product manufacturer and the consumer. So you're getting claims from retail foot traffic, misuse by a customer, product defect from the manufacturer. So to understand all the variables that you're exposed to, but then having a clear track of where can I transfer this risk if it doesn't fall on me is very, very important to do that due diligence.
So that's an interesting topic because as a dealer, how many of you work with more than 10 vendors or suppliers? Do you work with more than, you might work with BRP might be a vendor, but you may have other vendors like Turn 14. And then there's the small vendors where you buy direct products or services. Is there any risk there? Is there anything that dealers can do to make sure that there's coverage upstream?
Yes. So definitely evaluating the contract and the agreements that you have with your vendors to make sure you understand what risk and what liability am I keeping and what risk and what liability am I transferring. So if it's a product that you haven't manufactured or that you have no responsibility for other than to distribute, you want to have pretty tight agreement with that vendor. You want to get a certificate of insurance that shows your dealership on there is an additional insured. So if something happens to that product and you get named in a lawsuit, you can tender that back.
Okay. Does this apply? That's really interesting. So I need to look at my agreements. I need to actually read them instead of just sign them because I'm excited about getting a new product in. So I'm not so worried. I read my dealer agreements pretty carefully with the OEMs, but I think some of these smaller suppliers, I need to be real careful because that could put me at greater risk on an aftermarket product.
Right, and here's a great example. As a dealership, you may sell an ATV or UTV and you may upgrade the suspension, replace the wheels, and let's say that you buy the wheels from, overseas.
Bob's tires
or something like that. And the end consumer goes out, uses the product fails, someone gets injured, and the wheel manufacturer is nowhere to be found. Guess who's going to be on the hook for that? You as the dealership, even though you didn't make the wheel. Hey, I just installed it on this product. Well, if you didn't do the proper risk transfer, you've retained that risk.
Wow. Let's talk about the whole cyber world. I come from the 1900s where we didn't have the interweb when I was going to school. And now there's so many digital suppliers. There's someone for my CRM, my DMS, and there's a lot of things that I'm taking a digital product and displaying it to my customers. Is there any risk there, or can we just sign up and go?
Absolutely. So there's risk everywhere. And again, it's a matter of identifying it and figuring out where to retain and transfer. So the risk on the cyber side is also if there's a breach, somebody, breaks in and, hacks your system and, ransomware, gets information. If it's a third-party site that you're just basically taking information and transferring it through, they should be ultimately responsible for securing that data. So again, having the right contracts in place, having the right certificates of insurance, so if something happens, you can transfer that loss or that, the potential claim back to that vendor is critical. If not, then what Doug was saying, you're left holding the bag.
I've recently gotten to this cyber insurance policy business. You have to have it now, and we have it for our businesses. David in the back row raise your hand, David. David's my partner in Hero Hub, and he made me get cyber insurance. Thank you, because we have to cover these kinds of things. So what I'd like to do, this is huge, and I think if there's 2 or 3 takeaways, we've talked about a lot of things. I'd like to come back to you in a minute to share with our audience on what could they do to protect the business of their business. This is the topic today. But thank you, Sanjay, Doug. Thanks for being here. Those are just golden nuggets that we can take away. I'd like to come over to Barry, and maybe we can start, Barry, before we get going. Let's pull up a question about, I want to talk about employees. This is a topic near and dear to my heart because your business, the product of your business and what differentiate you is your people and the ability for them to execute and take care of a customer. And this is just an increasing problem. The cost of employee turnover can be massive, and so retaining those employees is huge. But I'd like to survey our audience, so pull out your phone again. What are the benefits that you're offering employees? And we can talk about, like, is it benefits or is it something else? There's probably a multi-pronged approach to having a successful business with your people capital, having great people. But what benefits do you offer full-time employees? I think this is a good starting point for the discussion. As that's coming in, let's talk about these issues. I see this as I see these bars grow, and I just think this is huge cost to a dealership. It seems like the providing these benefits is just a money pit. So help me with how do I deal with all this? It's overwhelming.
Yeah, absolutely. So I'm sure you're all aware that back in 2010 is when all the legislation around healthcare reform passed. And what we saw in 2010, there were a couple of key factors. Number one, they removed pre-existing exclusions for health plans, which meant that your health plan now had to cover any condition that anybody brought. Used to be if somebody came to work for you and they had heart disease, pre-existing to when they came to work for you, the health plan carved that out, wouldn't cover those benefits, so the insurance wasn't responsible for paying. Well, now by federal law, you are, and it is. The other thing that they changed that was significant was the removal of lifetime maximums. And some of us older guys remember $1 million lifetime maximum. Spend $1 million in claims, your coverage is over. At that point, you're uninsurable, and you hear the horror stories of people that lose their coverage and end up passing away because they can't get the treatment they need. So everybody agreed that the legislation was great for consumers. But the problem is with insurance, when you put more risk on an insurance platform, cost goes up. So what we saw in 2010, especially 2010 to 2015, were these astronomical increases, significant double-digit increases. We had clients that were seeing 40, 50% increases in their renewals. And so you put employers in a position where benefits are typically your second largest expense, right behind payroll. And when that expense is growing at double-digit increases, how do you maintain a profitable business? How do you continue to offer benefits and control that cost so that you can still attract and retain and keep people? Because you're right, the cost of turnover and training and the lost in consumer experience, not just the hard costs, are significant. So that was kind of the challenge people have been faced with. And so we've seen a lot of different emerging trends. And we put together some numbers. I think what we've seen over the last 10 years is a little bit of stabilization. Our previous number that looked from 2010 to 2020 was a 75% increase in the cost of health insurance. Well, from 2013 to 23, that's a 46.58% increase. So about 46 to 47% across the board. And we've seen the employer contributions increase, meaning you're contributing more money to the cost of health insurance. And we've seen the employee contribution increase. And we see both parties' increases outpacing, well, inflation, except for maybe the last year or two, but prior to that, dramatically outpacing inflation. So, and the challenge that you have as you see those costs goes up, what do employers do to control the cost? Well, I can either scale back benefits, I can raise deductibles, I can look at different design of plans. And what you have right now in the U.S. is you got 20% of workers in the United States have greater than a $6,000 max out of pocket on their health insurance plan. And you think about the average American, you see that next bullet point, 68% of Americans don't have $500 in the bank. and now I'm looking at potentially $6,000 in medical bills. What do I do? What do I do if my doctor says, you've got elevated blood sugar, we need to run full blood labs, and you know it's going to cost $1,200? What do you as an employee do? And so one of the really troubling statistics is back in 2010, the percent of Americans that didn't follow through with doctor-recommended treatment because they couldn't afford it was about 21% of the time. In 2020, that number had risen to 31%. So 1 out of 3 times your employees are saying, because of this out-of-pocket exposure, I can't get the treatment that the doctor is telling me that I need. So obviously, and in that final bullet point, medical bills are the largest cause of bankruptcies in the United States. So a couple things that I thought we would look at, and I'm a numbers guy, and I'm sorry if this is incredibly boring to you guys, but I really wanted to look at small employers versus large employers, because one of the dichotomies that you see in our society today is, as a small employer, how do I attract and keep top talent if I can't offer an extremely competitive benefits package? I mean, I can have phenomenal working conditions, and that's essential. It's hard to pace with the same advancement opportunities if you're a small organization with what large organizations can do. So I really wanted to get in and just kind of dissect health insurance for just a second. So we looked at average premiums. So for small firms, the average individual premium is about $726. For large firms, $693. But what's interesting about that number, theirs is about 10% less or 5% less, but their average deductible is $1,478, and the small firm is $2,434. So it's $1,000 more for the individual. So you're paying more money for an inferior plan because you're a smaller employer group. The other issue that you look at, and this really jumped out to me and I was kind of surprised, and this is a 2023 study, so it's very current. The amount of employers offering zero contribution, which means you're paying 100% of the premium, in small employer groups, it's 30% of the time, which was amazing to me, which means you guys care a lot about your employees and you're trying to get them to be able to afford the health insurance that you want to provide. So you're paying 100% of that premium. In large employers, that number is less than 6%. The flaw in that logic is, if I have an employer or an employee that's working for me and health insurance is free, is he going to take that plan? Absolutely. What if he has a spouse that's a teacher and she's got full coverage through the school system? Well, now they have full coverage for their family from the school and full coverage from you, which is secondary coverage, which will never be used, but you're paying for it.
It's wasted cost.
Absolutely.
To me as an employer.
Absolutely. We changed at our company. We used to pay 100% of health insurance for our employees. We changed to 93% of premium, so we're still paying the vast majority of it. But our enrollment percentage dropped by 22%. We saved tens of thousands of dollars in just the cost of health insurance with no difference in experience for our employees. So looking at small things like that in your strategy can have a significant impact.
That's great advice. Are there any other things that at small business dealerships, we may have some vendors, manufacturers or distributors here as well, anything else any strategies that you'd recommend to control the costs, but to have a great plan to retain great people?
Yeah, absolutely. And in fact, if you look at the next slide, I put up kind of 4 key bullet points. Number 1 was don't pay 100% of your employee premiums. A couple of bucks for skin in the game versus these massive deductible exposures don't mean a lot. The second is there's a really strong emerging trend in what is called a level funded health plan. And for many years, you really had 2 types of insurance. You had fully funded and self-funded. Fully funded is like Blue Cross, United Healthcare, Aetna. It's your fully insured plan. You pay a premium. They're responsible for all the claims, all the administration, and everything else. The other side of that coin is self-funded. And self-funded means I would take those same premiums that I normally pay Blue Cross, and I put those into my claims fund, and now I have an administrator on my behalf paying all the claims for my employees. So I'm essentially self-insuring our health insurance. I have the ability to attach what's called stop loss, which means I can cap what my exposure is. If my risk tolerance is $25,000, $50,000, $100,000, $250,000, the higher I go, the less the cost of stop loss. and the more efficient my health plan becomes. Well, there's this new hybrid, which is level funded, and it has some tremendous advantages for small employers. If any of you are part of a PEO, your PEO has these health plans. They're not going to tell you about it because they don't make as much money with these plans. But just to give you an example, the average, we looked at that average individual premium being over $700 for a fully insured plan. Level funded health plans are typically between $440 and $450. That is a dramatic savings for the exact same coverage. Now, you as the employer might be assuming a little more risk, but if you look at your typical demographic, it's young, male, healthy. They may be a little crazy with their hobbies, but overall, they're a relatively healthy population. You're an ideal risk pool. But you'll also see these different approaches like a PEO that will take your small employer group and put you into a large risk pool. So no, you're no longer worried about just your claims. They aggregate that risk across a large population. And in fact, we've just launched that approach as well through what's called a multiple employer benefit trust. We can take every dealership in the motorsports industry and put them in one risk pool, let you guys have one large plan where you can build that on the motorsports industry. So the good news about stress in the marketplace, like healthcare reform created, is it does create innovation. So very different approaches in structure. From the consumer standpoint, your employees still have a network of doctors. It feels and operates exactly like traditional fully insured plans, but now you take control. You've got full transparency. You know exactly what your claims are, really on a real-time basis. You know what your renewals are going to look like. If you didn't have claims the previous year, you're not going to get a 20% increase, because if you're under 100 employees, you're in community rating. You get rated on what the community does, not what you did. So these are really creative strategies, and if you ask your existing consultant about it, or you're welcome to talk to us about our approach. We're going to be doing some things on association sides, but level-funded health plans are a tremendous key to the future.
I would take a picture of this screen. This could be an agenda for the next discussion with my employee benefit provider to have these discussions. These are big discussions, and we'll watch for this industry-wide initiative.
Absolutely.
This could save collectively millions.
No question about it. And, one of the other things we mentioned is, so you look at these elevating deductibles. One of the products that we started writing back in the 1990s is a product called Gap Insurance. Gap Insurance is basically reinsuring the individual employee's deductible. And our strategy at that point was raise your deductible, and Mr. Employer, you pay for the Gap Insurance. And it's actually less expensive to do that than pay for the lower deductible health plan. So it's a good financial decisions, but Gap Insurance starts at first dollar. So you're doing a tremendous job at eliminating your employees' financial out-of-pocket. So you now have the ability to compete with big company type benefits, even being a small employer, and you kind of take that off the table as the reason people end up leaving your organization.
Barry, awesome. Thank you. We're going to come back for a rapid fire recap, and with these 2 to 3 takeaways. You've already got them here in these potential solutions. I love where it's going. Now we've got at the end of the row, but last but definitely not least, this is a very exciting topic of really how do we handle really sensitive data? How do we process transactions? I mean, this is what we do. We process, millions of dollars of transactions, and we've got a fun question on this one. This might surprise you. But pull out your Menti. I want to do this one more time. How does your business, this could be a dealership, you may have another business, but how do you collect credit card data? I won't spill the beans right now, but I'll share with you some of the ways that we did it back in the day. But one option, you collect credit card data over the phone, on a notepad or sticky notes, through the dealer website, e-commerce website. So lots of options there. I remember I had an employee that processed some credit card transactions and did an offsetting entry in Lightspeed to take out a loan for themselves. So they'd process a $500 transaction, do an offsetting entry, and take cash to do a loan. It's like you've seen those check to cash stores. That's not why I was in business. I was selling motorcycles. Seems sketchy. He wasn't there very long after that. But these are things that keep a dealership up at night, crazy things. I don't think anyone here put sticky notes.
I hope not.
So that's good. Congratulations.
And don't use Microsoft Excel either.
In my BDC, I went in one time and someone was writing down a credit card number on a sticky note. But obviously, these dealers are much better operators, more proficient than I was. But let's talk about this. What are some of the risks associated with collecting this sensitive data like this?
So there are pros and cons to accepting ACH, debit, and credit cards as a form of payment. The pros definitely outweigh the cons, in my opinion. I've been with the company for 15 years, been in the industry for 15 years. Yeah, the pros now outweigh the cons. I wouldn't be sitting here today. But that said, there are cons. One, as you know, there's an expense to it, which, by the way, we can help you out with. Just stop by booth 5124. That will be my only plug, I promise. But
Shameless plug.
the other con, obviously, is risk. What that entails is chargebacks, right? Could be a potential data breach, fraud. All can damage your business's reputation. But there are good habits that you can create to minimize risk and reduce PCI scope. And it starts with the business owner. And it trickles all the way down to their employees. So for instance, I saw a lot of businesses here where processing through a terminal. So if you have a retail environment, you definitely want to purchase the up-to-date technology such as the EMV chip readers, the tap to pay. Buy those terminals outright. They're not that expensive. Don't rent or lease. Just buy them outright. You own it. And you definitely want to ask for a second form of identification to verify they're the cardholder. Ask for a state ID or driver's license. I have spoke to a couple of dealers in the past day and a half, and they don't do that. So again, this is all about practicing good habits and instilling that into your employees to minimize risk. If you're processing through a non-present environment, such as through a shopping cart, or you're sending an invoice link to your client, manually keying everything over the phone into your virtual terminal, set up for reoccurring billing, there's more risk involved because you can't ask for that second form of identification, like a state ID or a driver's license, to verify they're the cardholder. When you're looking to potentially switching over to another payment processor, because believe me, I know I've been in the industry for 15 years. There's a lot of us out there, and I'm sure you get calls all the time. Do a little bit of research. Make sure that they are providing you with all the security tools to protect all those cards that are stored inside your virtual terminal. We do this through tokenization. You've probably heard of it before, where tokens are randomly generated and they're attached to all the cards you have on file. All the cardholder information is encrypted, making it nearly impossible to decrypt. So in the event of a breach, God forbid that happen, they're going to see encrypted data. In fact, our merchants, they don't even have access, even though a lot of times they're manually entering the card information themselves to process that transaction. They don't even have access to the credit cards on file. All they have visibility to is the token and the last 4 digits of the credit card number.
And this is what's required to be PCI. This is when they say be PCI compliant.
Yeah.
This is what we're talking about here, right?
Yeah. That goes back. I don't mean to repeat myself, but it's about creating good habits. There's I don't have the numbers in front of me, but I think I read in 2018, and I can't quote the site and I apologize, but I think only 42 42% of merchants in the U.S. were PCI compliant, meaning over half of the merchants that are accepting payments weren't taking 15, 30, 45 minutes at a time every year to complete the PCI compliance.
So then what's the big deal?
Questionnaire.
Most, half don't. So won't my insurance company just cover me if I'm not PCI compliant? Like, what's the worst that could happen if you say, you know what, I want to be non-compliant?
Well, for starters, you want to be up to standards with PCI, right? I mean, this questionnaire was created before I came into the industry 20 plus years ago. It was created by the car brands and issuing banks. It's a series of questions you have to answer. And once you complete the questionnaire, you're going to get a certificate via email. You have to do it every year. At least with us, you have to do it every year. Some of our competitors are quarterly and every 6 months, but we do it every year. And once you fill out that questionnaire, the following year later, you have to complete it again. If you don't complete the questionnaire, obviously you get hit with what we call a non-PCI compliance fee.
Because it sounds like a lot of work. So I'm like, well, is it really worth going through all that hassle?
So it's not, if I can use this word, it's not the most sexy topic to talk about in our industry. It just isn't. To me, it's boring. Business owners, I was talking to some dealers today, and as I was talking about it, they started to shut their eyes slowly and slowly. I'm like, oh boy, I'm losing them. But it is important. I think business owners in general get so busy, and I'm guilty of this too, just being an employee for a large organization, where we become a kind of a rat on the wheel. We kind of go through the motions because we get so much going on in our personal life and our business life that we kind of let things slip through the cracks.
Yeah, but if I have someone that's attentive and a professional partner like you, and my uncle Larry does merchant services, I'm assuming he's not PCI compliant. But if I have a professional organization as a partner, you're going to help make sure that I'm PCI compliant. You're going to help make sure that I implement these processes so I can stay out of jail.
Yeah. Well, you're not going to go to jail if you don't complete the questionnaire.
We could get fined or sued.
So you get.
So
we provide our merchants, Jared, the tools to become PCI compliant, but the credit card processing company, they can't complete the questionnaire on your behalf, right? It's wrong. We can guide you to the point how to get to the questionnaire, and from there, the business owner or whoever is a super admin of the merchant account or admin of the merchant account, they can complete the questionnaire. So the owner doesn't have to complete the questionnaire. Whoever is the admin to the merchant account can. And if you don't, the PCI compliance fees will rack up. And again, that's another additional expense. So I've seen it range from $9.99 a month to hundreds of dollars a month. So the longer it's once it's expired and the longer you wait, the more you're going to get dinged. The monthly fees are going to increase, and it doesn't do the credit card processing any good for our merchants to be non-PCI compliant, and it definitely doesn't do the merchants any good.
Okay, Sanjay, I want you to help us take this home. I've heard about hackers in, is it Myanmar? Yeah.
Could be.
There's like hacker terrorist organizations. All they do all day is they want to hack into my computers and steal my customers' data. They want to steal credit card data. It sounds like this is pretty important, what Rick is talking about, in order to have a good rate on my cyber insurance policy. Because that, at the end of the day, do these go hand in hand?
Absolutely. So insurance contracts, cyber insurance contracts, will ask in the questionnaire, are you PCI compliant? If you say no, doesn't mean they won't insure you, but you'll get a higher rate. If you say yes, and you get the discount on the insurance or whatever they apply, God forbid there's a hack later on and you need to file a claim, and it turns out you fell out of compliance, then the policy will not respond. So again, insurance companies always will go by the letter of the contract if and when a claim happens. So that's why it's very important to, if you are compliant, to maintain that compliance, to make sure the integrity of the contract is intact.
And Rick, this is huge. We should be gathering everyone together and having them come over here to have this discussion right now, because, I might not go to jail if I'm not PCI compliant, but hackers across overseas could hack into my system, steal my data because I don't qualify for cyber insurance. My customers are at risk and my business is at risk. And this is a huge, huge risk now. This is happening all the time.
Yeah. I mean, I could tell horror stories up here, but we don't have the time. But the way I kind of look at it, I parallel it to sports as steroids. There's everything an athlete will do to enhance his skills to make more money, right? So they're taking these steroids to hit the ball farther, throw the ball farther, whatever the case may be. They have to take tests all the time, as we know. But there's also doctors out there, unethical doctors, that give them serums to cheat the system, right? It's getting more protective now. It's same with cyber security and hackers, right? There's a lot of really 100 times smarter than people than me that if there's a will, there's a way. They'll figure out to get your credit card information. I mean,
we
it's
need
happened
to
me
protect,
personally, and it's happened to my wife too. So.
I want to be protected from hackers. I mean, that's a huge takeaway here. Let's give, before we go to rapid fire, let's give our subject matter experts a huge round of applause. Thank you so much, Rick, Barry, Douglas, and Sanjay. Look, this has been a lot of fun. These are things that you just don't want to talk about. You want to talk about how can I make more sales? But these are huge things that, as a business owner, these keep me up at night. And so thank you for taking the time to make the trek here to Las Vegas to the AIM Education Show. This has been fantastic. We talked about, I think, we mentioned the horror stories seminar. Rick will be here at 9:45 p.m. tonight, and we're going to take 45 minutes and talk about, I'm sure you all have horror stories to tell us, and that would be a fun one, like the 1,000 ways to die, 1,000 horror stories in the dealership. All right, to wrap up here, let's do rapid fire. What are two, maybe just a couple things that we can just check our notes to take away from this seminar to make sure we're protecting the business of our business? And we'll start right here, Douglas.
Make sure you work with your broker and they truly understand your operations so they can custom tailor your coverage based on what you're doing.
Love it.
I would say make sure you're reviewing your contracts. You know what liabilities you're retaining and what you're transferring, and make sure you have certificates of insurance on file from your vendors and your trading partners.
And I would say talk to your broker about level funded health plans, and don't pay 100% of your employees' premiums, no matter how much you love them. Just don't. And I also wanted to thank the guy from Eastern Canada for not heckling, because they have socialized medicine. So
just
Thank you.
practicing good habits. Make sure you fill out that awesome PCI questionnaire. And then just remember, like, you're not a convenience store where average transaction size are $5, $10, $15, and you're dealing with 100 transactions a day. Your average ticket sizes are thousands of dollars. So if there is a chargeback that occurs, what happens is that card holder is disputing the charge. What transpires during that is the issuing bank and the card brands are communicating with one another to figure out who's at fault here. The credit card processing company most of them should anyways, we have a dispute department to kind of hold our merchant's hand throughout that process, to guide them along the way, to do everything we can to win that dispute. But at the end of the day, if it falls on the merchant because they made a mistake, like, for example, as something as simple as asking for that second form identification, because again, this isn't a $10 transaction. You're not going to experience this in a convenience store. But with dealers, what they're selling here, I personally would do it every single time. It might seem a nuisance to your client, but they'll understand.
I love it. And protect yourself from hackers and a data breach. And look, stay out of jail and get a good night's sleep is what this is all about. Thank you. Let's give a round of applause again for our panelists. protecting the business of your business. And we'll see you all at 9:45 p.m. for Horror Stories, Part 2. Thank you. And
Jared.
look, if anyone, please stay and chat. I think Lee's going to be bringing donuts and chocolate milk up. But come up. If you come up, you can talk to the experts here off the stage and have a discussion. Share horror stories, ask questions. They're available for you. Take advantage of that consulting while you're here at AIM Expo. And thank you so much for coming. You've been an awesome audience. Thank you.